Hey everyone, welcome to the return of the Bitcoin Breathe with your host Tone Vase, and joined by none other than Jimmy Song, the man who helped start this series on the Tone Vase YouTube channel. So it's great that he is back with us, and we're gonna go through some of the crypto stories that were making headlines in the last 48 hours. Jimmy, how are you? Where are you? How's life, man? Haven't talked to you in ages.
I know, right? Like I've been traveling with my family, doing a little family vacation. Everywhere I go, people ask me, "Hey, Jimmy, when's the next morning brief gonna be? What's going on, man?" So it's good to be back, and hopefully we can do more of these going forward. It's been kind of crazy with Leah getting married and you traveling everywhere and me doing lots of other stuff. So hopefully we could get something going again.
All right, so let's let us go ahead and jump into the show. And if you have any announcements, I mean, you can do that now. You can save them for the end. We'll probably have more people watching towards the end, so let's go ahead and save those. All right, let's jump right into it. Here's a story that catches everyone's attention because it has the word moon in it. Diana, a blockchain lunar registry, attempts to tokenize the moon. This is great, yada, yada, yada. Let's start here. The project is offering collective ownership of Earth's only natural satellite through dividing the moon into just under 4 billion cells encoded on a blockchain by a 3-word address. Proof of stake is, of course, proof of stake. Why on earth would there be work involved? Proof of stake is the cadastral map, okay, is represented by 2 tokens. So they're not even scamming you with 1 token. They're going straight for to do it double. Gaia and Mond. Wow, that's impressive. Now, I can talk about the 3-word concept real quick. So about 2 or 3 years ago, I attended a conference called The Next Billion. It wasn't a crypto conference. It's a conference where innovative startups and they present their they're showing you what projects they're working on, and the goal of all the speakers, and they only had like 5 minutes to present. It wasn't funding, like they're not presenting for funding, they're presenting what they're working on. And the goal is, how do you connect the next billion people into, to everyone else? And the 3-word concept is this. It's basically, you can subdivide every 3 by 3 meter plot of land on Earth by 3 words. Now, they're not exactly random, but like 3 random words, right? And just like we have a 24-word seed that basically protects our private key, if Earth has a lot of land, but just 3 random words can identify your 3 by 3 plot of land, and all you have general thoughts, because I don't know if this can get any more ridiculous.
Yeah, first of all, how are you going to make sure that this supposedly a registry of land deeds of the moon or something like that, how is this in any way enforceable, right? Like if like say we someday have like a moon colony or whatever, and that the real estate on the moon actually is worth something, how are you going to enforce the fact that this actual thing on the blockchain is corresponding to that? This is what's called the oracle problem, and the problem is if those 2 things need to be connected, and somebody needs to enforce the fact that if you say you own a plot of land somewhere, that it is actually yours and not someone else's. This is a completely ridiculous idea, and even if, say, all of the world's governments agreed on this, What happens when somebody steals your token, steals your thing? Is it now suddenly the thieves and that you don't have it anymore? It's a ridiculous and stupid concept, and this is the problem with almost anything on the blockchain, is that you have a real life thing and something on the blockchain, and those two need to be tied together, and you can't do it.
Well, okay, so I had an interesting comment. Someone is saying, Tone, you are wasting time with this nonsense story. But this is not a nonsense story, right? I mean, they might as well be selling land through the blockchain on Pluto or on the sun or in another galaxy. The point is that this concept is no different than selling land on the blockchain, next door on Earth. Like, the point is, this is not enforceable, and the blockchain is meaningless here, and you're just creating a stupid token. Like, the companies that are doing real estate on the blockchain, they're no different than these guys. And if I come up with a company tomorrow selling land on the sun and selling you a token for it, it wouldn't be that much different than selling land on Earth.
Yeah,
When it comes to actual blockchain functionality.
Mm-hmm. And this has always been the problem, and this is the biggest problem with every blockchain project in existence, pretty much, is that they want some sort of real world utility, and as soon as you cross into the physical realm from the digital realm, this is the problem that you always run into, which is that you can't tie the two together without some sort of authority saying that you do, and at that point it's centralized, and the whole point of a blockchain is useless. So it's this, and this is something that a lot of people fail to understand, or willfully fail to understand, which is that it doesn't really make sense for any of these applications, and this is a very good example of one of those things.
And this is an article from CoinDesk, right? I mean, if anything, CoinDesk should be better, right? Look at the last sentence. As part of the project roadmap, the team hopes to establish a Together Moon Foundation, appoints an international and space expert defense team, and develop the business model for moon possession.
Right. Yeah, and this is what pretty much every ICO does, is they speculate on what they could possibly want in the future. It's kind of like, we're hoping that the world governments will achieve world peace and do X, Y, and Z according to exactly what we want that will benefit all our shareholders. It's idle and stupid speculation.
Yeah, I mean, it's just an example of, hey, let's have two tokens and we're going to make a bunch of money doing something that, even if it could be done, which it can't, is not enforceable, because the blockchain doesn't do that, because you're relying on something in the physical realm. This is no different than selling land on the sun through a token.
Yeah, I almost feel like this is like, I mean, can people be really this stupid? I mean, it feels like it's almost like a Coin Jazeera article, and somebody noticed that it's been 50 years since we first landed on the moon, so let's make this article happen.
That is a great point. Coin Jazeera, I'm very disappointed in you guys. You should have beaten this story to it. You really should have. All right. So let's stick with this concept of land registrations, because the German regulator decided to approve a $280 million Ethereum token sale. Again, CoinDesk, you've been in this space longer than me. Ethereum token sale took place a long time ago, right? It's an ERC20 on top of Ethereum. You guys are slacking there a little bit. Anyway, so another company that wants to do real estate on the blockchain got regulatory approval to sell their tokens. This is very, very disappointing. It's again, what happens? Who's going to be held? Who's going to be responsible when Ethereum blockchain is not functioning anymore and goes belly up? Who's responsible for what happens to these ERC20 tokens? And what do you think will happen with these companies that have sold these tokens all over the place and probably can't even keep track of them anymore?
Yeah, I mean, these guys are all going to have, at some point, they're going to get sued by everyone and everything. These regulators are going to come after them. A lot of other people are going to come after them. There are going to be some very angry people. I mean, there are already a lot of angry people. And look at a lot of ICO tokens, and they've gone down 90+% since their peak. So it's inevitable that stuff like this is going to backfire spectacularly. We're just sort of waiting for the other shoe to drop first. But yeah, I mean, this is, to me, like any sort of regulatory story is not very interesting. It's
Well,
somebody
it's not.
bribing somebody
I'm
else.
trying. Yeah, I'm trying to. I'm trying not to talk about the regulatory side of things. What my law show is for. Jimmy, do you believe that in the near future, hopefully sooner than later, the Ethereum blockchain will no longer function as a quasi decentralized form they think it is today?
Well, I mean, they're already sort of deprecating Ethereum 1.0 with Ethereum 2.0. They're already planning obsolescence for their current chain, and they're trying to migrate to a new one. And they're giving like super optimistic timelines, like next year or something like that. When in fact it's probably going to take more like 5 or 6 years at least. So this is it's very clear that the current system cannot handle even crypto kitties. There's no way they're going to be able to handle anything, more frequent than that. So yeah, I don't know. Like Joseph Lubin, I think the other day said something like, we need a new decentralized internet, and Ethereum is it. It's all marketing, guys. It's all ways to deceive even more people and keep the bag holders holding and so on. It's a ridiculous concept.
All right, let's move on over to Iran. So rumors have it that Iran is announcing a gold-backed national cryptocurrency, clearly learning from Venezuela, where they announced a petroleum-backed cryptocurrency. So not too many details in this article, but clearly some crypto companies involved. Just read a couple of things. Accordingly, the Central Bank of Iran has approved the issuance of a new cryptocurrency. This is according to the CEO of Iranian Information and Communications Technology, FENUP, and there's his name. Iran's cryptocurrency will be supported by gold, but its function is similar to other cryptocurrencies. The crypto asset is designed to maximize the use of the Iranian frozen bank assets. I think we know where this is going. Jimmy, why don't you take first crack at it, then I'll throw my thoughts in there.
All right, so it's interesting because what they're basically talking about are the frozen assets that they have. I guess they have gold abroad or something like that they can't get access to because of their sanctions, and this is a way to tokenize it maybe and have it so that they can somebody else can go redeem them or something like that. It's very hard to say. But this is another kind of stable coin that seems to be the direction that they're going with, except that it's not stable to the US dollar, it's stable to the price of gold. If it's fully backed, that would be one thing, but it's backed by frozen assets, which is interesting. I'm not exactly sure how that would work.
Right, but at the same time, Iran does have oil reserves, and Iran can sell oil, and they can convert that into gold, backing their cryptocurrency. So they could always acquire more gold.
Maybe that's their plan. I think what they're trying to do is honestly just to get out under the U.S. dollar hegemony that the rest of the world is under. I've heard a number, something like 92% of all international transactions are settled in the U.S. dollar, and this is why sanctions against Iran are so effective. By having a currency backed by gold and allowing for some level of convertibility, I imagine the point is to try to get around a lot of those sanctions and so on. That said, I don't know how far this will get. This is probably one of the many things that they're trying, similar with Russia and China. They're all trying to figure out ways to get out from under the US dollar hegemony. So whether or not they're successful, I don't know. But this is a different animal than Bitcoin, guys. Like a lot of people tend to conflate some Bitcoin, which is decentralized digital scarcity, with stable coins, which are essentially backed, centralized, fully reserved thing that also happens to be digital. They really have very little in common, and they all get put under the same umbrella of cryptocurrency, but in fact they're nothing alike. So I mean, it's interesting, but as far as I'm concerned, this is something that the Iranian central bank can try and do as much as possible, but it doesn't really affect Bitcoin in any way, shape, or
All right, so let me just read the last two paragraphs real quick, and then we'll close out the story with this concept. Accordingly, I can't pronounce people's names, urge the government to retain its policy on limiting Bitcoin in Iran. This is because authorities seized 1,000 Bitcoin mining machines in Yazd province just last month. The Iranian government seems keen on ensuring that Bitcoin miners don't profit off of its considerably cheap power costs because it's subsidized. Ironically, the American government has accused the Iranian government of actually using Bitcoin to circumvent sanctions. This is because Bitcoin is immutable and not subject to centralized controls. Therefore, the Iranian government seems to have a do as I say, not as I do policy on Bitcoin. So, I mean, I don't know how seriously is Iran using or used Bitcoin to avoid sanctions? I don't know. I don't trust the U.S. government in the statement. Unless they prove it to me in the Bitcoin blockchain that it was definitely Iran. Good luck with that. And they're not going to do it. But the point I raised this morning on my price show is this. I got into another debate with a Ripple fan the other day, right? And this was aired live. And once again, Ripple people seem to think that Ripple is decentralized. And the point that I made this morning, and I would like for you to maybe shine more light on the situation, is that if Iran wanted to use Bitcoin to get around US sanctions, they could. There is nothing that will stop them, nothing that has been able to stop them, nothing that will stop them. Now, the US can yell and scream about it, but there's nothing they can actually do to stop Iran from using Bitcoin. Now, imagine if Iran announced they are going to use Ripple and XRapid to get around US sanctions. What happens to the Ripple token and the Ripple CEO and the Ripple company?
Yeah, I mean, they all get thrown in prison or something. I mean, like here's the thing: whenever you have a centralized party like that, and Ripple, let's not mince words, is very much a centralized token, pretty much about as centralized as you can get. They'll say, hey, you need to reverse this transaction, or this transaction violates U.S. sanctions, and as a violator, you are not only going to get fined, but you're probably going to be thrown in prison. There's a lot of ways in which the U.S. government can put pressure on. And just to get back to the point about Bitcoin in Iran, there are people that are using Bitcoin. It might not be the Iranian government, but there's certainly people within Iran that are receiving Bitcoin or sending Bitcoin out as a way to get around the sanctions. And this is something that's known by a lot of human rights people, that this is a very effective way to do things because Bitcoin does have a lot of liquidity and so on. So I mean, it's exactly what you said is exactly right. Like, Ripple is centralized, and it's very clear exactly where an adversary can go and put pressure. With Bitcoin, that isn't clear at all. And if you have two parties, one of which is in Iran, you might not even know that one of the parties is in Iran. But even if you did, you have no idea who the other side is. And unless you do know that, there's no way to really put pressure on anyone or anything.
All right. Also, it's being reported that Iran has legalized crypto mining. And so the news stories from these countries are all over the place. Bitcoin is banned in India. Bitcoin is not banned in India. It's all kind of hard to decipher. But the point is, due to the U.S. sanctions, not only are the people in Iran and the government of Iran are very familiar with Bitcoin, and this is the thing, right? A lot like with me, a lot like the world changes, right? I mean, look at Hong Kong was nothing, and look what it is today. You know, like 50, 60 years ago when it was actually no, Hong Kong was already something. Singapore, again, look what they built on a little tiny piece of land. You know, look what Taiwan did. Like Vietnam was basically completely destroyed back, and they were communists for a while. Look what like things change fast. Like if countries like, you know, I know they're under somewhat of a dictatorship, but I can see 50 years down the line when like North Korea and Iran and potentially even Venezuela, like 50 to 75 years down the line, if the citizens of those countries, you know, turn it all around. I mean, look at Rwanda, you know, what happened there in the 90s, and now I can't wait to go there and visit. Hearing amazing things about that little country. Like, I can totally picture it, like in 70 years, that if these countries like embrace Bitcoin and capitalism that Bitcoin can bring with, you know, this politically neutral money, that could be where the innovation is 50 years from now.
Oh, absolutely. And this is something that I've been saying for years, which is that if you have something that doesn't inflate, where you can store value and no one can really confiscate it from you either through inflation or something else, that's a giant boom to your society. And right now, a lot of these dictatorial governments have these financial instruments where they can inflate away people's currency and so on. And that tends to be the method of oppression. And you remove that, and almost immediately people have a lot more motivation to you know, build civilization and so on.
All right, real quick, just now I'm not going to talk much about this story. 5 million in gold bars were seized at Heathrow Airport, supposedly coming, they were moving through Venezuela, out of the Cayman Islands. I think it was on its way to Switzerland or something, or on its way to the Cayman Islands. The point is this, cartels are still using US dollars and gold. And I'm not saying Bitcoin is a better use case for them, but Bitcoin is a use case because clearly now the government will say, hey, look, we're doing our job, we stopped it. Well, good luck. How many of these shipments take place every week? Yeah, it was on its way to Switzerland, right? And the authorities can pretend like they're stopping this, but they're not. And this is where gold, you're not going to hear, if you properly protect your Bitcoin, there should not be an article that says 5 million worth of Bitcoin were seized at Heathrow Airport.
Yeah, and they're being really stupid. They should have just used US dollars. And you know, like drug cartels have known for a long time that you need to declare anything above $10,000 in cash. You can bring $9,999 in cash with no problem, pretty much anywhere in the world. And if you're traveling to Hong Kong, you can bring suitcases full of cash, and they don't ask you, you know, how much are you bringing or whatever. So it's you know, cash has been the way that most of them have laundered, and we know for a fact that a lot of banks like Barclays, you know, like have drug money that they've laundered and so on. So yeah, using gold is kind of primitive, and they're kind of paying for it. Yeah, but that said, you know, I don't know if drug cartels can really use Bitcoin either, because you know, like you need some really good OPSEC, and you need to make sure you're anonymizing correctly and so on. I don't know how many of them are technically sophisticated enough to figure that out.
Okay, so moving on to, it's like one of those things, right? Like if I had free time, I used to do this back in the day, like years ago. Whenever I see headlines like this, I would like put in bold lines here. Should have used Bitcoin. Anyway, this is very interesting. So I've been going off on Blockstack a little bit lately because now they have now they're legally selling their token. I read this article, and this is how it goes, right? Like, Jimmy, I might get a smile out of you here. where I hear about a company and I literally, all I see is like a headline, and maybe someone told me in 2 sentences what they're doing. And all of a sudden I am critical on my YouTube channel about their company. And everyone starts screaming, you know nothing, you have to do your research, you didn't do the research, you didn't read it. I spent 5 to 10 minutes reading about it, and here's what I usually scream out loud. Holy shit, it's worse than I even thought. Do you feel the same way sometimes?
Of course. I mean, like, you don't need to learn that much to know that it's something is terrible. I mean, like,
Hey, let's
I mean, if you looked at startup ideas from 1998, you didn't need to research all of it. You could just like learn about the concept and go, wow, that's terrible. Like there's a lot of stuff like that right now in Bitcoin, blockchain, and things like that. So
I wish I had time to read the whole thing. I'm not sure where to start, but let's start here. Rather than risk bootstrapping a new proof of work blockchain, and instead of working with the limitations and issues inherent to proof of stake consensus, the Stacks blockchain uses a novel proof of burn consensus mechanism to bootstrap. This mechanism reuses the hash power of an established blockchain like Bitcoin. There is a path available to slowly transition away from Bitcoin as the hash power of the new Stacks blockchain builds up.
All right, it sounds a lot like merge mining or some hybrid between merge mining and their own proof of work. That's exactly what it sounds like.
Right. In traditional cryptocurrency mining, like we see in Bitcoin and many other cryptocurrency networks, the economic costs imposed on the miners, yada, 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 indeed do proof of work calculations. This makes it more and more costly. Rather than try to mimic the Stacks blockchain, builds on it instead of expanding electrical hardware, participants in proof of burn consensus do just that. They provably destroy or burn their own Bitcoin as the economic costs of participation. Every participant competing for the opportunity to write the block must burn a certain amount of proof of work token, Bitcoin, to enter the competition. A participant's likelihood of winning the competition increases with the percentage of Bitcoin they burn compared to other participants. The competition winners write the block, collect the transaction fees, and earn the block reward of stack tokens. So they want you to burn and destroy Bitcoin to write a block to the stack token, earning stack tokens. And the more you offer to burn Bitcoin, the higher the probability that you will get to write the block. But it doesn't guarantee that you will get to write that block, even if you burned 90% more Bitcoin than anyone else to write the next block. Jimmy, your thoughts?
Yeah, I mean, Counterparty did a proof of burn way back in 2013 or 2014 when they launched. And, hey, a fool and his money are parted. So for everyone that's doing this, thank you, because you are making my Bitcoin more valuable. I personally would never do such a thing. I guess, but hey, if it causes the scarcity of Bitcoin to go up, then yeah, I mean, I'm not going to complain.
They are literally selling you a token that the SEC has approved, and you're earning it by literally throwing your Bitcoin in the garbage, down the toilet, and destroying it. That's their business model.
Yep. You're permanently converting Bitcoin to these stack tokens, and you're never able to convert it back. It's a one-way. You're scrambling the egg, as they would say, and that's you can't go back to the original egg anymore. So yeah, it's if you want to do it, I wouldn't advise it if you're a holder, but if you do it, thank you, because you're going to make my own Bitcoins more valuable.
Well, that's how the system works. Now, do you have any insight into what Blockstack is actually good for? To me, It's another Ethereum competitor, along with Cardano and Tron and Tezos and BitShares, and even though BitShares came first, and what's another one that's popular?
Neo, I don't
No,
know.
that's not popular. Um,
I
uh,
think it was a top 10 coin, man.
uh,
I don't know. There's probably a bunch of others, but I mean, honestly, they're all trying to be the top of a new pyramid. So I wrote an article a while back about how Ethereum is really the top.
EOS, sorry.
Yeah, yeah. I wrote an article a while back about how Ethereum is the top of the pyramid of their own pyramid scheme because everyone that does an ICO has to pay a tax to Ethereum for all of the transactions that they do and so on. And all of these other platforms are saying, well, we don't want to pay a tax to Ethereum. We want to be at the top of our own pyramid. And that's exactly what they are. They're pyramid schemes, right? Like they're putting in new tokens on top of theirs, and and they have to pay a tax to to the top of the pyramid every time that they do it. And yeah, it's I mean, I'm not sure if Blockstack is that in particular, but that's something that a lot of these quote unquote utility tokens are trying to do is they're trying to provide utility for some other utility, which is supposed to provide some other utility, none of which has actually proven to show utility, but it's all sort of this shell game that they're playing.
Yeah, I think back in the day, the Bitcoin Uncensored podcast used to refer to this as turtles all the way down.
Yeah, pretty much. Yeah, it never really stops, and yeah, it's sad.
All right, let's talk about good news. Please tell us about Sea Lightning. I've been so busy, like I'm not on. I mean, I'm still using Bitcoin on chain. I really got to get my Lightning game up. I'm just never in one place for more than a few days to to deal with it. But I got to start using Lightning more. Tell us what Blockstream is up to.
Yeah, first of all, the article is written by Lisa Nagud and Christian Decker. Just shout out to Lisa. She took my class like a year and 3 months ago, something like that. Now she's like writing Lightning posts for Blockstream. So good job, Lisa. Very proud of you. Anyway, this improvement is largely based on the Million Channel project, which in of itself was very interesting. They wanted to figure out what some of the optimizations would be if you had 1 million channels, and they did all this experimentation around doing that. And there's another Blockstream post that you can read about their learnings from the Million Channel project and figuring out, okay, well, these are certain things that we need to make sure work, or this is how we can get more efficient routing and so on. So a lot of the improvements in 0.7.1 for Sea Lightning are based on the results from that study, which they conducted not too long ago. So it's really powerful. Hopefully, it will be faster and more reliable and so on. Routing tends to be the big thing, and getting inbound liquidity and so on. If you are running your own Sea Lightning, then this would be the way to do it. So. I mean, now would be a good time to go and upgrade and so on. So yeah, they have more plugin hooks and for LApps and things like that. So really good stuff. If you are running Sea Lightning, definitely upgrade.
Junior, what's your opinion on how Lightning adoption's coming along?
It's really hard to say because you can sort of guess at the number of channels, but you don't have to announce them. So there's no real way to know. You can make some approximations and so on. But it's coming along. There's a lot of different startups that are in the community that are doing this stuff. It's I think the big thing is inbound liquidity for people that want to get paid, and that's been a problem for a little bit, and we'll see how that shakes itself out, because when somebody's providing you liquidity, they have to lock up their own Bitcoins to do it, and that's not something that people want to do unless there's at least something in it for them. And routing fees probably aren't enough at this point to really do that. A lot of people are doing it just because they want to play with Lightning and do other things. But this is one of the things that you have to learn more about, because the security model is different, the economic model is different, a lot of things are different. You do get instant transactions, of course, and you get a lot more privacy, but there are trade-offs, and you have to consider them before you really dive in. If you want to just pay with Lightning, that's probably a lot easier, and that's I think what a lot of people are using it for. But for the other end, where you need inbound liquidity and so on, it's going to take some time to for the economics of that to really come to fruition.
All right. Anything else you want to add in regards to Lightning? We haven't covered it in a while. Lightning and Liquid will be probably the main topics of next year's Understanding Bitcoin conference, but that's not till May, even though time flies.
Yeah, so at Breaking Bitcoin, I think one of the more interesting things that's come along, like sort of alongside Lightning, is this idea of state channels by Ruben Samson, who's Dutch but works out of Korea. We were discussing it, and Christian Decker thinks that with L2 and something like state chains, you could potentially open new Lightning channels without a single on-chain transaction. Which in of itself would be a massive boost for layer 2 capacity, because if you don't need an on-chain transaction to open a Lightning channel, then you essentially have no cost for any Lightning things. You can just do it without having to record anything on chain. And it gives you essentially infinite scalability if you do it right. And you can add new people in and things like that. So that feels to me, if it's workable and once it gets implemented and so on, that seems to me the big next thing that will happen with Lightning. And like the ability to open a channel without an on-chain transaction is huge. So that in of itself would be really, really interesting. And like adding that as a second layer 2 and combining it with Lightning and maybe even side chains and so on would has the potential to be massively, massively scalable.
All right, let me get your thoughts real quick on privacy as well. Someone in the live chat, one of my moderators, threw this in. You're probably not aware of this, Jimmy, because it looks like it broke a few hours ago. And Samurai just sent out, they're saying public service announcement. There exists an entity operating as a de-anonymizing hot wallet present within transactions by Wasabi since June 1st, so about almost 2 months now. This entity has been clustered very easily due to flagrant address reuse and downright bizarre behavior. This impacts all users since June. You might want to take a look at it. Probably too early to get your comment on this.
So I think this has been a back and forth between Samurai and Wasabi for a little while now, but they've been claiming this. Yeah. I mean, basically what Samurai is saying is the way Wasabi does coin anonymization is through giant coin joins. And if you download Wasabi wallet, it has that option, and everyone puts in the same amount. So say like 0.01 Bitcoin or something like that. And you get like 50 inputs that have 0.01 Bitcoin, and everyone gets some tiny smaller amount, so like 0.09 or something 0.0099 Bitcoin or something like that. And that way you have no idea which input corresponds to which output, and that way it's sufficiently anonymized. What Samurai Wallet is saying right here is that one entity, so if it's like 100 input coin join and 100 inputs, 100 outputs, what they're saying is that there's one entity that's providing something like 75 of those inputs or something like that. Now, that may be a way in which you can de-anonymize some of this stuff, but you still have 25 and 25. So you need to know how much of it has been done, and you need to actually provide more proof of this stuff. I mean, it just makes the anonymization less good. I don't think it's fully de-anonymized unless you have like 99 of the 100 slots, then you know for certain that the last slot, you know which slot that last one goes to, and so on. But yeah, it is really bizarre that if you were doing something like that, that you would reuse an address, because that would sort of give up the game right away that you are doing something like that. So on-chain proof should be pretty easy to find if that's the case. That said, I'm not sure if like if they're trying to FUD Wasabi or whatever. We do know that they're competitors and that they've been going at it for a while. And Wasabi does not like Samurai, and Samurai does not like Wasabi. But yeah, we'll see exactly how this shakes out. Hopefully they'll have a blog post and show all their work, so we don't have to
All
like.
right. Sounds good. Are you generally happy with how privacy on the Bitcoin blockchain is being? I know it's coming later than anyone than we'd like, but are you happy with, in general, with progress on the privacy and fungibility side of the Bitcoin blockchain?
I mean, I think the way to really do privacy is through a sidechain. So I mean, you can do some on-chain stuff, and if you're careful about it, you can definitely have it. But it's like a lot of these solutions, like the market will settle on one. For a while there, it was shapeshift to Monero and then back, and then you're okay at that point. But I think what you're gonna end up having is go to a side chain and then come back out after you've anonymized sufficiently, which I think you can do right now with Liquid. They have confidential assets and confidential transactions, so you have if you can do some sort of coin join on Liquid, I think that would essentially make all of this stuff moot. And if you can do cross-chain atomic swaps with Lightning or something like that, that would improve privacy even more. But all that said, the more important thing than privacy to me is the scarcity of Bitcoin, and all these other projects like Monero, Zcash, and so on that try to provide that privacy always do it at the expense of not really knowing how many of the coin exists. And
well, I wouldn't. You don't even have to go there. They do it at the expense of Bitcoin's scarcity. So Zcash and Monero is inflation on top of Bitcoin.
Yeah, well,
by existing.
I mean, they're printing their own money. Number one, they're centralized. They're essentially, giving up the thing that makes Bitcoin valuable in order the actual scarcity, provable scarcity, in order to do it. Even like the Mimblewimble projects do the same thing. So I don't really know if privacy is something to pursue to that degree. I do think that it's definitely going to come, but it's going to take a long time, and it's going to take even longer for people to trust it. I think Liquid is solid technology, but right now the market doesn't trust it yet because it's fairly new, and I imagine that's going until it proves itself over time, and that like there's no real risk, or the risk is minimal, or it's confined to a very short time period or something like that. A lot of the privacy-based things are going to take a while. I mean, people are very comfortable, I think, just sort of owning Bitcoin and having exposure to it. The privacy aspect is something that people say they want, but don't necessarily value quite as much as people as their economic behavior tends to indicate.
Right, and to me, those are two different things, right? So Monero and Zcash and Mimblewimble tokens, they are less secure than Bitcoin. That's one side of it, and the other side of it, they're removing the scarcity of Bitcoin. So they're to me, they're either one of them will make their coin fail, but they have both.
Yeah, I mean, the big thing is that if you break the ECDSA math or something like that, or I guess in Monero's case, it would be the ed DSA or whatever, and for Zcash it would be ZK snarks. If you break any of those, there's no real way for you to know that the coin hasn't inflated significantly, and and that's kind of a problem, right? Because you have to trust that the math behind it and the people that created the math actually
Right,
knew what they're.
and that's the thing. And because Bitcoin is at the top of the food chain, there is
Yeah.
incentive to do that because you can always exit into Bitcoin. There is not much of an incentive to 51% attack, destroy Bitcoin, because then you're destroying all value across all blockchains, and you don't actually get any financial benefit by doing it. You get street cred from the governments.
Yeah, or I mean, I guess you could potentially like short it or something like that. There's always ways to game things.
True, but you would short it in terms of Bitcoin if you want to get away with it anonymously, right?
Yeah.
But then your value still goes to zero.
Yeah,
But
I mean, it's definitely possible for some sort of state level actor to do something like that. But that said, all this is to say that like this, the privacy aspect of it is, I don't think the market really is demanding it that much. And like lots of people cry about it on Twitter, but I actually don't think the market wants it as much as some people think they do. It'd be nice. It's a nice to have, certainly. But the reason why people own Bitcoin is because it's a really good store of value, not because it's completely anonymous, or it has the potential to be completely anonymous or whatever. So, I mean, that's just my take on it.
all right, we're gonna go ahead and wrap this up. Just an announcement. I'm not gonna talk about this. Backed send out the tweet. Today kicks off user acceptance testing of ICE markets for the backed Bitcoin daily and monthly futures contracts. Testing is proceeding as planned with participants from around the world. So there you guys go. Backed launched. I don't know what this means for the price of Bitcoin. It doesn't seem to mean all that much. Bitcoin has been trading in this range of 10,000 for a little while now, and I will trust TA to see where that's headed. And another small announcement, Nick Carter just published a nice article. It's the settlement assurance stupid. Basically, it's an article, once again, explaining why Bitcoin is different than everything else, not only that came before Bitcoin, but everything that came after Bitcoin. It's an article in a series of why Bitcoin is special. If you've been watching this YouTube channel for the last 3 years and the World Crypto Network prior to that, and still watching the World Crypto Network, you should be fully aware of why Bitcoin is special. All right.
You should also note that TD Ameritrade also started the futures trading. It might be back related. I'm not sure, but
it's possible that they're accessing back. Yeah, I haven't looked fully into that. All right, Jimmy, your website, Programming Bitcoin, and what's going on? Give us some news. What are you up to? Where are you headed? Where are the upcoming? What's your upcoming schedule looking like?
Yeah, so I'm still working on a wallet class, and I the last one I did was in San Francisco, June 27, 28. But yeah, I really want to get the wallet class off the ground, and I'm taking a vacation right now as a way to sort of recharge and get all the ideas out and things like that. But yeah, I mean, the next one will probably be the next one that I have planned is probably going to be in San Francisco in early November. Other than that, my book was available on Prime Day, and I think it sold something like 70 or 80%. Yeah, so that's not working right now. So can you?
Sorry.
Yeah, I need to go and fix that. But yeah, a lot of different things that are coming, including possibly another book and things like that. Stay tuned for those announcements later. But for now, please buy my book, Programming in Bitcoin, on Amazon, and yeah, it's I'll be back with more stuff after this vacation.
All right, very cool. And of course, my site, tonebase.com. I'm also scaling back. Same with you, just like you, Jimmy. Right now, I have a webinar coming up in a couple of weeks, and you will be in Dallas, Texas as well, right, for BitBlock Boom?
Yes, I have to work on that talk, actually.
Yeah, me too, actually. They want me to, I'm going to do a new talk there as well. So I will be at BitBlock Boom, and I will be doing my only currently scheduled in-person workshop over in Dallas, Texas. All right, guys. Thank you so much for tuning in. And any closing thoughts, Jimmy?
Yeah, it's we had that excitement back in late May, and yeah, it's kind of funny how everything's, or was it late June? Yeah, it was late June. But yeah, I feel like the price has settled and people are sort of going back to a new normal again. And I'm hoping that this will sort of consolidate and allow us all to work and get prepared for the next boom.
All right, very cool. Hey, Jimmy, thanks for joining me. I will try to do these shows more often. Maybe Giacomo will be able to join tomorrow or Thursday. We will discuss when we should do the next show. We'll try to get these going at least, twice a week, maybe, just to keep it going, because that was a really crappy hiatus for a few months, and we will do our best. All right, guys, thank you so much for watching, and hopefully we will see you soon on another episode of Bitcoin Brief.
All right.
You forgot something.
Oh, this song is done.